Good afternoon, happy Friday, and what a week it was, economic-wise. All right, let's start at, the beginning, right? Mortgage News Daily 30-year fixed average today is at 7.04% APR. That is up from last Friday, which was at 6.95% APR. But that was not the whole story. Let's see. Yesterday, Mortgage News Daily 30-year fixed average was at 7.14% APR. So big move from yesterday to today. And let's see. Let's talk about what happened. So on today is Friday. So on Wednesday, the Federal Reserve came out and reduced interest rates, right? The Fed funds rate by 0.25%. And that was anticipated by the markets. That was no surprise. What the surprise was had to do with their forecast, right? And they moved the amount of rate cuts from 4 in 2025 to 2 in 2025. And the markets completely freaked out. They cited this because inflation is, or at the time, I'll get to that in a minute, inflation is starting to go up a little bit from the numbers that they had previously, and the labor market is doing okay. And so they decided to come out with a hawkish comment, and the markets didn't like that. So fast forward to today. The PCE number came out. That is I always get the personal consumption expenditures. That is the preferred measure of the Federal Reserve as far as where inflation is, right? CPI, Consumer Price Index, is kind of a older number, and they don't quite put as much weight on that as the PCE. Both have the same kind of components, just weighted a little different. It gives them a different perspective on what inflation is doing. So PCE, right, there's two. There is the regular PCE, and then there's core PCE, and the core PCE takes out the very volatile food and gas inflation out of it, and just kind of gets, as it says, the core. So the core PCE came in lower than expected. It came in at 2.7. It was supposed to be at 2.9. And so the markets reacted favorably. When I say 2.7, 2.9%, right, that's the annualized. And so the Federal Reserve is trying to get inflation down to 2%. So this would give them the idea that they need to cut a little more to keep it going down and not leave rates higher to stop inflation, right? So the markets are still broken. When I say that, Thursday or Wednesday, when they came out with their comments, that was a complete knee-jerk reaction, right? Rates went through the roof. The 10-year Treasury bond went through the roof just because of the information. So now today, another knee-jerk reaction. Inflation is lower than expected, and so therefore they're going to have to spur the economy. And all this happened in 2 days. All right. So again, when I say the markets are broken, right, there's no stability. People are just reacting off of pure comments in whatever way they need to get in the investment position that they think is going to happen. So there we go. Crazy stuff going on. How do we make sense of all this? Again, I would say to anticipate having 30-year fixed mortgage interest rates hanging around probably 6.5% to maybe 6.25% APR. By the end of 2025, you'll probably see some dips down probably pretty close to that 6.25 in that time period, and then you'll probably see little spikes back up to the 7.75, maybe pushing 7, depending on what kind of information comes out in 2025. So just giving you some insights. That's what my guess is. I don't have a crystal ball, but this is what I've been seeing, and hope it just gives you a little bit of light. So always hope interest rates go lower, because it's way more fun when interest rates are just a little lower. All right. Have any questions? Please let me know. What's going on in the community? Big Sky has a lot of snow, I've heard. I haven't personally been. I talked to a couple people that say the snow is amazing. Still lively stuff going downtown. Everybody's in the holiday spirit. So yes, Merry Christmas. I will not give you an update until after. So I hope your holiday is great and enjoy the time with your friends and family. Talk to you soon.